So we began talking about trends. Okay, so and trend, we said yesterday that the trend is your friend. Okay, that's one of the things we said yesterday. We said the trend is your friend. The trend is your friend. Okay, and we talked about different types of trends. We talked about the uptrend, we talked about the downtrend, we talked about the sideways trend. The uptrend, the downtrend, the sideways trend. Okay, I've not posted that video. I'll do it today. Now, what we want to do right now is that we want to go into the market and begin to look for trends and try to identify trends using the things we've learned so far. Okay, what we've learned so far include we learned support and resistance, roofs and floors. Okay, support is floor, resistance is roof. Okay, we've learned that. Then we learned about swings as well, swings. So if you've been in this class, I encourage you to start practicing those things that you learn, right? So now in the space of Forex, there's a whole lot of information. There's a whole broad range of information, a whole lot of information, right? But the thing is that if you focus only on information, you might be swarmed with a lot of knowledge, a lot of information. Let me not call it knowledge. You might be swarmed with a lot of information that it becomes difficult for you to take action. So it starts looking to you as though you are in school, right? And if you remember being in school, you have to know everything. Like you have to go from the beginning of the class to the end of the class, cover the course from the start, from introduction to the end before you can take an exam. That's the way it is in school, right? So, but in these things that we are doing, in a lot of things in life, it's not really like that. It's not like you have to start from the beginning to the end. There's nothing like the beginning and the end, actually. So you don't need to know everything in the Forex market. There are a lot of things, a lot of ways, Fibonacci, Ichimoku. That's one reason why it's very difficult to try to learn Forex by yourself. That's why it's difficult, because it looks as if there's a whole lot to go through. But one thing you must understand about the Forex market is that all of that information don't have to come together for you to make money in the market. You don't have to know all of them to make money in the market. You can know just one thing and you perform better than someone that spent the last 1 year trying to learn everything. So that's the reason why practicing what you learn is very, very important. If you send me a message and you're practicing something and you want me to go, explain it better for you and all that, I'll be glad to do that. And then also the classes I would take, you can go back and go through them. So you don't have to go through a whole lot of things, in fact, for you to be profitable in the market. You just need to know the basics and then begin to practice and apply them. That's all. You don't need to know 1,000 things. There are so many things in the Forex market, and it's not a full course. It's not like, oh, you must know it from A to Z. No, Forex doesn't work like that. In fact, those who attempt to learn it like that are usually people who are trying to learn it themselves. They have no coaching, no teacher, no mentor. And then they usually will give up along the way because it's very broad and it becomes more complicated. By the time you have to know this, know this, know this, know this, and every one of that, because you can go on YouTube, for example, and look at so many different educators, many different coaches and mentors who are doing videos on YouTube. And you think, oh, this guy is using this thing. Oh, this guy is using this guy is using this. You think that because they are using different things, you ought to know all the things that you see them use. It's absolutely not true. It's absolutely not so. You just need a few things. And these things that we've begun to explain are the basics of anything that you see in the market. Whatever it is. For example, if you are going to use a tool called Fibonacci, which I often use, right? Fibonacci is basically support and resistance. That's what it is. The only thing is that Fibonacci may do it better for you and get you more accurate points that actually hold in the market than you could do probably by yourself. You see, that's just the thing with the thing with Fibonacci. So what I'm saying is that you have to begin to practice what we are going through here in this session so that you can begin to catch them, because this is what it takes. Okay. So yesterday we started talking about trends. One we are going to do in this particular class is that we are going to go back and try to look into the market and see if we can identify certain trends. What trends can we identify now? And therefore, what can we do based on the trends that we identify? We've said that when it comes to uptrends, when it comes to uptrends, you are looking for buy trades. When you identify an uptrend, you are looking predominantly, you are looking to take buy trades. Now, it is not only buy, price doesn't only move up in a buy, in an uptrend. You will see points where price will move down on a temporary basis in an uptrend as well. But you as a trader, what you are looking for mostly in an uptrend is opportunities to buy. Okay. So you take those little moves, those little sell moves you see in a downtrend, you take them as retracement, as what we call retracement or pullback. So you are saying, okay, even though we're in an uptrend, I have identified we're in an uptrend, price is currently coming down. I am not looking to be selling though price is coming down. I'm looking for price to get to a point for me to buy. So I'm looking for buy trades, buy opportunities in an uptrend mostly, right? Now, if I'm in a downtrend, I'm looking for sell opportunities mostly in a downtrend. So mostly, predominantly, I'm looking for sell opportunities in a downtrend, not necessarily buy opportunities. Even though I know that I will see certain buy moves. I will see certain buy candles, certain buy setups on a downtrend as well. But that's not my goal. I'm not looking to enter trades that are for a buy in a downtrend. So I'll focus on my downtrend, on my sell trades in a downtrend. Then if I'm in a sideways trend, a sideways trend is also called a range. Okay, like we said yesterday, a sideways trend is also called a range. And then when I'm in a range, I would do one of two things. I either wait. For me personally, when I'm in a ranging environment, the tendency is for me to want to wait. The tendency is for me to want to wait and see what happens. I want to see a breakout of the range before I trade. Okay, so that's what I would say. Like what I said in the class yesterday, I consider a breakout of a ranging environment a better opportunity when it comes to trading. You see, so let's go into the market and try to see what can we do, what can we identify in the market right now in terms of trends. What trends are we seeing? Let's look at Euro USD. Let's see if we can see another one here. Okay, let's look at dollar index. We'll look at the dollar index. We'll look at Euro USD. Let's see if we can get any other one. Maybe we also look at USD JPY. Okay. Okay. So let's look at what we can see. Let's try to identify certain trends in the markets at this time. Okay, so we said that a trend is an uptrend is a series of higher highs and higher lows from yesterday. A trend is a series of higher highs and higher lows yesterday, right? So what we want to see now is that let's look at, and there is a tool on your chart that you will always find. You will find it on MT4, you will find it on TradingView, you'll find it on any tool, any platform that you're using. I demonstrated it a few days ago, 2 days ago actually, when I was trying to when I was trying to show us how to use drawing tools on MetaTrader on your phone. Okay, I demonstrated that, right? So it's called trend lines. Trend lines. Trend line. You see this trend line. So trend line is something you can use to that you can use to draw on your charts to try to connect swings together. To try to connect swings. Remember what we said swings are? Swings are the oscillations in the market, the up and down movements you see in the market is what we consider, is what we call swings. The up and down movements you see in the market is what we call swings. So when you take a trend line, you look at this now, you can see that price seems to be going up from here. Now, many times you will see an uptrend or a downtrend with your eyes. But then it's still important that you are able to use a tool. It's still important that you're able to use a couple of tools to help you see clearly, what might be happening in the market, right? So in this case now, let's try to use a trend line to draw and see what we have. This is a trend line right here, trend line. So let's see what we can connect. Always remember, we said it before, that when it comes to drawing trends and whatnot in the market, you may most of the time you may not get perfect drawings. So the goal is for you not to get perfect drawings, is for you to understand what's happening in the market at every time. Okay, so now you will notice that, look at this trend line we just drew now. From all this point, price was moving up, just kept going up, kept going up, kept going up, kept going up, kept going up. It comes here, it goes again, goes here, comes here, goes up again, comes here, goes up again, comes here, goes up again, right? It just continued like that until a certain point, until this area here, okay? So let's take note of that and keep watching what we're about to do now, okay? So what we have seen now is that we notice that price hits all these areas. These are swing lows, these are swing highs. Just what we were talking about yesterday, these are higher highs. You see higher high, higher high. This area here is a high. Okay, this area is a high. You have a higher high, you have a higher high again there. Just kept going up. Okay, so this point now, you have a low point here, you have a higher low, right? So we said on top here, these tops here are called highs, the bottoms are called lows, right? So now you can see we have a high here, a higher high, a higher high. We have a low here, a low. Why is it a low? Because it's under the chart, under price. This is the outer part of price, the upper part. The upper part is always called the highs. The lower part is always called the lows. The higher part is called the highs. The lower part is called the lows. Okay, so you can see all these areas now are called higher lows. You see a low here, you see a higher low. Why is it higher low? Because this high is higher than this high. 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 It just kept continuing like that. So what you will notice in the market is this. What you will notice is that price will usually move from an uptrend to a range, to a downtrend, from an uptrend to a range to a downtrend, or from an uptrend to a range to a continuation uptrend. So these are certain scenarios you will have. Okay, there are certain scenarios you will have here. So you notice that price does this. Okay, so it can go from an uptrend to a range, as a rangey market. So we said we have uptrend, we have downtrend, we have range. Okay, so we have uptrend to a range to an uptrend again, uptrend, which means continuation. This is a continuation. This is what you call a continuation. This is what you call a continuation. So in this case, we have an uptrend, then we have price getting to a range. which means a sideways movement, then an uptrend. After that, again, after the uptrend, it will continue again. It will continue, the uptrend will continue again. After the range finishes, the uptrend continues. That's what you call a continuation. Okay, so that's one. Then number two, you can have an uptrend, then a range, then a downtrend. Then a downtrend. So this one is a change in direction. Change in direction. Change in trend. So this is a change in trend. So this is a change in trend. So the same thing, you can have so number three, you can have a downtrend, a range. Now, if you notice that range seems to be an intermediate position. A range seems to be an intermediate position. Intermediate, so it's always in the middle. So this is the reason why many times it is advisable that when you see a range, you hold on for what is going to happen next. Because usually a range will lead to a continuation uptrend, or a range will lead to a downtrend. So what you want to wait for at that time is to wait for that range, to be removed, to be broken. When that range is broken, then you will now see clarity in the market again. Because whenever there's a range, you don't really know what's happening in the market. You don't really see clarity in the market when there's a range, when the range is happening. There's no much clarity at that time, right? So downtrend, you have a downtrend to a range to a downtrend. So a downtrend. So this again is a continuation. This again is a continuation. This is a continuation, right? So this is a continuation for a downtrend. The first one here is a continuation for an uptrend. The second one here, now number three, is a continuation for a downtrend. Then number four, you have a downtrend. You have a downtrend to a range to an uptrend. So this one again is a change in trend. So this is a change in trend again. So you see price does this. You see an uptrend into a range to an uptrend again. That's a continuation. So a range is more like an intermediate position. So an intermediate position is a linking position, right? That's why sometimes they call it a consolidation. That's one word that a range is usually called. Range is also known as consolidation. Range equals consolidation. So, of course, consolidation is English. You know what consolidation is. Something that is like it's stabilizing, right? At that point. And the reason it's called a consolidation is because at that time, it's just like a solid area where there's no clarity as to what direction the market is going at that time. So a range is also known as a consolidation. So whenever price is moving from an uptrend to a continuation uptrend, you will see a consolidation. That consolidation is an intermediate position that needs to be broken out for you to know where price is going next. Where is price going next? You know, so usually it's very hard, except a news event makes it happen. If a news event is not involved, it's very hard for you to see an uptrend turn to a downtrend immediately, instantly. It happens, but it happens during times of major news events, major economic news events, right? You just see an uptrend, price was going in one direction, a major news came out, and then price reverses and changes direction completely. Okay, you will see that if you go on a USD JPY chart now, you will see that happen. It happened some months ago where price just reversed just went up to a certain area about 150 something and then reversed. Price has not gone back there again since. Just moved from a huge uptrend to a downtrend, a huge downtrend immediately, right? And that was because of an intervention by the Bank of Japan. and it was a news event. So it was a huge intervention by the Bank of Japan. So it was a news event. So that usually doesn't happen most of the time. You will see that price moves from an uptrend, it gets into a consolidation or a range first, then before it gets into a downtrend. Or if it's an uptrend, you see price moves up, then it gets to a consolidation, then it moves to a downtrend. If the downtrend is coming down, then it moves into a consolidation, then before it gets into an uptrend. So it's very important to understand the range is usually an intermediate position. Okay, it's an intermediate position between one move and the next, intermediate. So a range most of the time is an intermediate position between one move, one major trend and another. So is a transition point between one major trend and another trend. One major trend and another trend, right? So that's what it is. So let's look into the market now and see what we have. Let's see if we can get anything out of that. So we were on the DXY. See this guy, DXY. This DXY is what we call the dollar index. It's also called the US dollar index. Now, what is the US dollar index? The US dollar index is an instrument that tracks the dollar, the strength of the dollar. So it tracks the strength of the dollar. What does that mean? It means that whatever is happening with the US economy is going to be reflected in on this chart I'm showing right now. The dollar index is what is going to show you what is exactly happening in the dollar with the US dollar as a currency in itself, with the US dollar as a currency standing alone. Okay, and why is the US dollar standing alone something to watch? It's something to watch because what is happening with the dollar affects every other currency in the world. It happens what's happening with the dollar affects every other currency in the world. Why? Because the dollar is the currency of that is used for most transactions around the world. So whatever happens to the US economy affects everybody. It affects every currency. It affects every whatever. It affects everybody, every instrument, every currency, every asset. Right? If you are trading oil, what are you trading with? You're trading with dollar. You're trading cryptocurrency, you're trading with dollars. You're trading with gold, commodities, you're trading with dollars. What again? You're trading other currencies like the euro, like the Japanese yen, like the the Great Britain pound. You cannot transact anything without the dollars, right? So that's why it's very, very important what happens with the dollar. And then this is an index that tracks the dollar itself. Okay, so whenever this, whatever happens here is very significant because it has a huge impact, huge ramifications when it comes to its effects on every other instrument out there, right? So let's look at this now. You see that we have been in an uptrend, or we're in an uptrend with the dollar. We were in an uptrend. Okay, we were in an uptrend. But what happened here at around this area now, you see that the uptrend was broken. When we drew this trend line, you see every one of these points, every one of this area, once it touched the line, it went back. It touched the line, it kept going up. Touched the line, it kept going up. But at a point, you notice that the line was broken out. It came through the line, started coming down. This shows you, this is a point right here that shows you a change in trend. This is a change in trend. This whole area now is a change in trend. So it's telling you that the trend is changing. The dollar has been buying massively. Now it looks as if the trend is about to change. And you notice that it already seems to be moving downwards now. It seems like it's moving downwards. See? So now you can already see that we are beginning to see some signals. We are beginning to see some signals of a downtrend. We are beginning to see some signals of a downtrend. And this is the way a downtrend is likely going to look. This is the way the downtrend is likely going to look. You see? That's the way the downtrend is likely going to look. Hold on, let me try to draw this. Okay. Okay, maybe something like this. So this is likely the way the trend is going to it's likely going to start going down like this. So you start to notice that we said a downtrend is a series of lower lows and lower highs. The lower lows and lower highs. Can you see now this area here is a high? Okay, is a high. Why is it a high? Let me repeat. Is a high because this is the outer part of the charts. Outer part of price, outer part, the bottom here is the lower part. So this upper part is called the highs, the lower part is called the lows. Okay, so now we have a high there. Now you notice that this area now is a lower high, is lower than this point. Is lower. Okay, the lower, it's not that the low point now is not very high yet. It's not very, the distance between them is not much, but you can still see that this is a low, this is a lower high. This is a high, this is a lower high. So it looks as if it's going to continue like that, and keep coming down. Now let's look at this bottom here. So we have a low here, have a low point there. Now we have another low point here. You see, this low now is lower than this low is lower than this low. So we have a lower low. You see, so likely we are going to see maybe another lower low somewhere around here. So we are expecting now that dollar index may go up to this point and eventually come down to this area like this to give us another lower low. You see, so it means now that we can see that it looks now that the dollar index is beginning to fall, is beginning to form a downtrend. The dollar index is beginning to form a downtrend. You see? So take note of that. The dollar index, this is how a downtrend forms. This is how an uptrend moves into a downtrend. It moves into a downtrend. So in this case now, we can see that there was a little consolidation around here. There was a little consolidation around here, a little range around here before price started coming down. It's not very obvious. There are times where it will be very hugely obvious. Okay, and then one of the reasons why I think this has been happening is that over the past few days, there's been a lot of news events. Okay, this morning I was compiling a list of certain news events that have been happening throughout the week, and today we still have one. We have one. That one is going to affect the CAD. Is an employment details that will affect the CAD. That's going to be by 1:30. Okay, so think about it. You see what's going on in the market. So you see what's been going on. So all these news events is what's turning the dollar index from a buy trend, from an uptrend into a downtrend almost like immediately. You see? So now we are seeing that it looks as if a downtrend is forming. A downtrend is forming. Downtrend is forming on the dollar index. So this is how you analyze the market and look at what the trend looks like. So all you need to do now is go pick an instrument. Could be Euro USD. Look at this Euro USD now. Look at this Euro USD now, right? When you look at this Euro USD now, what do you see? I want you guys to do this. Look at this now. Look at this. Can you see this? Look at this. One thing you know about the Euro USD is that the Euro USD is exactly opposite. It forms an exact opposite relationship with the dollar index itself. So what you see in the dollar index now, the flip side of it is Euro USD. So you can see now the Euro USD right here, how it just keeps coming down. It's been in a downtrend, 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 downtrend. But at a point, at around this point, what happened? It flipped to an uptrend. It flipped to an uptrend. You see, it flipped. Right now, what we are seeing is price is beginning to make, is the build up for an uptrend. The build up for an uptrend is what we are seeing here now. Is building up into an uptrend, building up into an uptrend, building up into an uptrend. That's what we are seeing right now. You see? So it was on a downtrend here, coming down very swiftly, coming down very heavily, but suddenly it changed direction. suddenly it changed direction. Suddenly it changed direction and then price starts going up. Price is about going up right now. So price is about going up right now. Price is about going up right now. You see? So you see what's going on? Price is about going up. Sorry for the noise, guys. It's in my office. Something is moving. I don't know what it is. Okay. So price is about going up right now. You can see it has started going up already. So this is one of the reasons why we are anticipating that Euro USD is likely to go into a buy soon today, right? So these are the things that we have to understand. So what I want us to do is, like I said, I don't want this class is very long.